Hi, your little guy here, the unknown trader, and today we're gonna be looking at something very important. Believe me, this is important. I'm gonna show you a couple of trades that are important, okay? Very important. And if you master this, believe me, you'll become highly profitable, okay? So without wasting any time, let's jump into it, okay? First of all, there are certain things you must know, okay? There is something that we call a brings trade, okay? So what I'm talking about is okay, if you're using like South African time, okay, I'm gonna say it's 9:30. But if you're using United States Standard Time or United States time, okay, you just flip it, okay, you just flip it, because if it's 9:30 here, then at USA it will be 3:30. So I'm gonna be using 9:30 and 3:30. Please pay close attention to this, okay? I'm using South African time because that's where I'm located right now, okay? So this is during the London session, okay? London session, okay, okay. It's fine. London session, and again I'm gonna talk about 3:30, okay? 3:30. This is gonna be a USA session, okay? This is the US session, okay? So if you look here, we have two things, okay? If you are gonna be using a United States time, that will be during the London session. It's gonna be 3:30, okay? And during the US session, it's gonna be 9:30. You just flip these times, okay? But if you're using South African time like me, then these are your times, okay? 9:30, that's when the US session opens, okay? Officially, that's when it opens. Yes, when you look at our session times, we'll jump into that in a moment. When you look at those session times, then you will realize that we start an hour before, okay? That's an hour before, yes, and then there is 9:30, okay? And then it closes at 11 a.m. in South African time. And the US session, we start at 2 p.m. South African time, and it ends at 5 p.m. These are the only two sessions that I'm looking at, and I'm gonna show you something, okay? So again, I repeat, if you're using US time, just flip. For US session, it's gonna be for London session, it's gonna be this time, and for US session, it's gonna be this time, okay? So when we talk about a brings trade, we are looking at the candles that open at I'm using South African time, okay? We are looking at a candle that opens at 9:30, okay? 9:30 up and closes at 9:45, okay? South African time. And here during the US, we are looking at a candle that opens at 3:30. That's 3:30, okay? And closes at 3:45. 45, okay? This is 3:45, okay? If you're using South African time, yeah. So please just use a time converter. Here I use survey time to convert times, okay? You can just put in here, you can put in South African time and your own country, and then it will give you the exact times, okay? Remember, I'm using South African time, okay? Just use this. I'm using survey time, okay? Converter, okay? It's just a Chrome extension. You can just install it and it will help you, okay? So these are the most important candles of the day. Why? Because this candle opens the US session. So you must know one of two things. If this candle is at the high of the day, okay, high of the day, or if it's at the low of the day, low of the day. We are not talking about something that's in the middle, okay? We don't care about something that's in the middle, and I'll show you this on the charts. If this candle is at the high of the day or the low of the day, I'm talking about the high of that day, okay? The high of that day. Say for instance, maybe the market during the Asian session was just like this, consolidating, and then during the London session it just went up, Okay, if this candle appears here, this is the high. Okay, the same applies if this is flipped. Say maybe Asia consolidated and then yes, and then 9:30 opened here. This is the low of the day. This is the high of the day. It's the high of the current day. Okay, this is the low of the current day. If this candle either is a pin, okay, please pay close attention. If it's a pin, okay, if it's an engulf, okay, or if it's a raro track, I'll show you what I mean. By a pin, I mean, okay, since this is the high of the day, a pin will be a candle like this, okay, where they went up and up and up fast, and then they came down and closed, okay. An engulf is, say for instance, okay, you see this is an engulf. Why? Because it has closed all the body of this candle has engulfed the body of this candle. So this is an engulf. The same applies to if we have a candle like this, okay, this is a candle, and then the following candle is like this, okay, this is an engulf. Why? Because it has engulfed, it has covered the whole body of the previous candle, okay. I hope you understand. If you don't, please repeat this. It's important. If a raro track is a candle that, say for instance, it goes up quite quick, maybe 15 pips, and the following 15 minutes it's down, okay, 15 or 20 pips. I'll show you what I mean about this. Say maybe this candle went up, it's a bullish candle, okay, maybe it went up 15 pips, okay, 15 pips, and the following candle went down 15 to 20 pips, okay, 15 to 20 pips, and all the previous candles you find that they were just like small candles just like this, okay. So what happened? They were going up and up, and all of a sudden they went up quite quick, violently, okay, with a big candle. But the following candle, if you are looking at a 15-minute chart, the following candle came down immediately. This is a railway track, raro track. It's like a railway track, okay. Please understand these candles. It's important. If it's a pin, or if it's an engulf, or if it's a railway track, okay, if immediately at 3:30 or up to 3:45 you see any of these three candles at the high or at the low of the day, then guys, you have a very, very good trade, okay, very good one. But I'll show you what I mean, okay. The same applies to here at 3:30 or at 3:45. If it's at the high of the day, the same. If it's a pin, either it's a pin, it's an engulf, or it's a railway track. I'm not going to repeat these candles, okay, I'm not going to repeat them. If you find any of these candles at this time, okay, if you're using a 15-minute time frame, if the 3:30 opening candle, which will obviously close at 3:45, if it happens to be any of these three candles at the high of the day or at the low of the day, then you have a very good trade. I'm repeating this. You don't have to wait for a break in structure or whatsoever. This is a sign of a very good trade. In other words, if you want to be profitable, look for the Brinks trade, okay? Look for the Brinks trade. It's highly profitable and important to look at this. So what I'm emphasizing is a day has 24 hours. Okay, we have many candles. If you are using a 1 hour time frame, then you'll have 24 candles. Okay, so if you are using a 15-minute time frame, you'll just have to multiply 24 by 4, because 1 hour will have 4 candles, 15, 15, 15. Okay, so guys, what I'm trying to say is look out for these times. Look out for these times, okay? Look out for these times. I know we talk about three pushes, okay? okay, it's fine. 3 pushes. I made a mistake here. Okay, there's an E and an S. Pushes. Okay, so once you see 3 pushes and you see any of these candles, I repeat, 3 pushes, then any of these candles at 9:30 going to 9:45. This is one candle on a 15-minute time frame, and on a 5-minute time frame it's going to be 3 candles. On a 1-minute time frame it's going to be 15 candles. You just observe their behavior. Or if it's at 3:30 South African time, okay, 3:30 to 3:45, that's 3:30 to a 3:45, okay. Look for these times, okay. And what I'm trying to tell you is you can ignore all the times throughout the day and look starting from 9:30 or 3:30. That's when you'll get a good trade, okay? That's when you'll get a good trade. Because if you're going to be trading throughout the entire day, then you might be getting chopped or you won't have a clear picture. Because let me tell you something that happens. A market will go up in 3 pushes most of the time. Could be 3 days. It could be 3 pushes in terms of numbers. If you're using Swiss spot indicator, you know what I'm talking about. Maybe it's 50, 25, 25, 25 pip, 3 levels, 50 pip, 50 pip, 50 pips. Maybe it went up or down 150 pips. That's 3 levels of 50 pips, okay. Maybe it went up or down 300 pips. That's 3 levels of 100 pip. 100 times 3, that's 3 levels, okay. It could be 3 pushes straight right away, 3 pushes, okay, like, you know, okay, I'll show you. Or else it could be in terms of session. Maybe this is Asia, this is gonna be London, this is gonna be US, okay. So it could just go up, consolidate in the middle, go up, consolidate in the middle, and go up. When you draw a line here, you say 1, you draw a second line after this session has ended. On the session box you'll get 2, and then this will be your 3, and then maybe here it's gonna be 3:30. When they give you a pin, they go up, pin, and then they will be ready to reverse. And most of the time they might come to the low of the day. But what you should know is don't open a position aiming to hold. Use the day count. We're talking about the day count, okay. If you still don't understand the day count, go to our previous videos, you'll understand, okay. But what will happen most of the time is if it has gone up, say maybe it has gone up 150 pips, okay, 150 pips, that will be pips, okay. That will be maybe 50 and 50. Oh, sorry for this. Oh, okay, it's just the WhatsApp. Okay, fine. I don't know, somebody send me this. Okay, okay, and this, oh no, I don't want to do this. And this is 50. So these are 3 levels. Most of the time what will happen when the market corrects, okay, it will correct roughly from 50% of this whole move. What do I mean? I mean that if it goes 150 pips, okay, you can get roughly 75 pips on the correction. Then it can close, or sometimes it can go down. But to make sure that you are not holding a profitable trade that is coming back for you later or tomorrow, it's better to just set your profit here, or you can do a range expansion if you see that it can go a range expansion. But most of the time 50% will be what you get. Even if it goes up for 3 days, maybe day 1, day 2, and day 3, okay, when correcting, maybe the overall trend is up. When the market is correcting after 3 days, it is more likely to correct 50% of this entire move. So you can just calculate and take 50%, but preferably you can take 50 pips, or else you can just do a range expansion. But I'm just trying to help, because there are cases where it will go down as planned, however it will just come back for you. Just use the day count to know what might happen, okay. But don't forget, the most important thing in this video right now is the brings trade, the candle that opens at 9:30 and closes at 9:45, or the candle during the US session that opens at 3:30 and closes at 3:45. Okay, pay attention to this. It's gonna be a pin, or it's gonna be an engulf, or else it's gonna be a railway track. This is important. Okay, now let's jump into our charts and see what happened. And yes, if you want to be profitable, what we will emphasize is taking less trades. Okay, sorry, this is just something I was okay. So right now we are looking at okay, let's start with gold, because I took gold yesterday, and most importantly, I didn't open any position on Monday. I didn't open a position on Tuesday. Wednesday, I was out of the market until yesterday during the US session, and I'm gonna show you what I'm talking about right now. Okay, so without further ado, let's jump into it. Okay. uh, okay Sorry for that, I had to respond. Okay, right now let's go to a 15-minute time frame. Okay, we are going to a 15-minute time frame. Okay, let's put this over here, it's fine. Okay, or over here, yeah. So if you look at yesterday, this market was just going down like most other markets. They were just going up and up and up, and they didn't really present nice opportunities or whatsoever. Okay, so if you look at what happened yesterday, we have a market that okay, it made a low here, okay, during Asia, and then it went all the way to the top, okay, on a 15-minute chart. Okay, so let's try to get 1 2 3. Okay, first of all, let's bring in our sessions. Okay, if you look, yes, it went down, but it went up. Remember, the Asian session has to establish the high and the low, the initial consolidation of the day, the high and the low of the day. Okay, so what happens is, okay, if we draw a line here at the end of the session, you see, okay, we have one push to the top. Yes, it made a low, but it also made a high. Okay, and if you look at this candle, let's look at the time, but I'm not talking about the Asian session. Okay, look at this candle. It happened exactly at okay, this session opens at 2 a.m. in the morning, and I didn't talk about this session when I was explaining, okay, because I don't like trading this session. Okay, but look, the same applies if you are talking about Asia. Then the candle will have to come at 3:30, because Asian times are the same as the US times. It's just that one will be AM and one will be PM. Look at this time. You know the broker is behind in 2 hours, but look at this time. Look at this time, guys. Look at this time. The session opened here, and then immediately at 3:30 they gave you what? Look at this. I explained something like railway tracks to you. Look at this candle. They take you down. Okay, they take you down crazily. They used 2 candles in this case. They took you down violently. Most people were chasing this trade. Okay, most people were actually chasing this trade. Okay, so immediately they pulled back with a big candle. So they want to make sure that everybody who sold here is at a loss immediately. Okay, that's what they want to make sure of. They want to see everybody who entered here at a loss immediately. Okay, so that's the main objective of a railway track. Okay, that's the main objective of a railway track. Okay, it's a candle that shifts the zone immediately. They want to shift the zone, but I'm not going to talk about this. So if you come and bring in the numbers right here, right now, okay, this is going to be 1. Okay, this is going to be your first push. Okay, 1, and then we bring in another number. This is going to be your second push, which is 2, and then you bring in a third number. This is going to be number 3, which is your third push. Okay, okay, it's gonna be your third push. Okay, guys, so I hope you understand from what I showed you. to what I'm showing you now. Please combine what I've shown you so far, okay? But I'll explain that going forward. So you have 1, 2, 3. You have 3 pushes in terms of sessions. They will do this most of the time. Sometimes what they will do is they will take the market up for 3 days. On the 3rd day, they will give you sessions like these. You see? Sessions like this. Why? Because on the 3rd day, they know they will be reversing. Therefore, they want people to chase the move. And when a move is like this, first session up, second session up, third session goes up, most people will be buying and buying and buying, and they will be ready to reverse. However, kindly take a screenshot of this, okay? You're gonna be seeing this frequently, or you're gonna be seeing this on at least 2 currency pairs each day, okay? Where a session goes like this, 1, 2, 3, and we know this market is broken down. The overall trend is down, okay? Because it has been going down. You see, breaking the lows, breaking the lows, breaking the lows. You see, the highs are intact, the highs are intact, the highs are intact. This shows you that the overall trend is down, okay? The overall trend is down, okay? So, look at what they do. They keep people going up, whereas they know the overall trend is down, okay? Day count, use a day count as well. But even if it has gone down 1 day, 2 days, 3 days, you don't want to counter trend a strong move just because it's day 3. No, you must observe the behavior, okay? If on the 3rd day they're gonna go up, usually they won't start like this, okay? They won't start like this, okay? So let's look at what really transpires now. On the 3rd level, this is the US session, okay? US session, this is the high of the day. If we use what I just showed you or what we just explained, we need to be at the high or low of the day. Let me try to bring back what we were talking about. You see, in this case, it's US session. We have to be at the high or at the low of the day. And we are looking at these times, high or low of the day. So let's dive into what we have just seen. Now we are at what? We are at the high of the day, okay? This is the high of the day, okay? This is the high of the day. This is the high of the day. This is the low of the day, okay? So let's look at the times. We have 3 levels already, we know. Let's look in terms of pips. We have 141 pips. Let me write this down. We have a move that went up 140 pips. Let's say 140, okay, pips. What does 140 pips tell you? It tells you that this is almost 150 pips. Why? Remember, markets are not gonna be perfect. They know that some people will figure this out. Therefore, there must be variations. And most of the variations will come either as a session change. Sometimes this will happen during the London session, where maybe yesterday, what did they do? Yesterday, they took the market down 1, 2, 3. And then Asia consolidated or continued taking the market down. Then in that case, this, which is London, will be their session for correcting, okay? It's always 3 pushes. Look at the previous day, look at the current day, look at the bigger picture. It's not about what you're trading on the current day. It's what about they painted over days, over sessions, over 3 hours, okay? That's what they paint. Just take that into consideration. It could be 3 days. It could be 3 sessions in 1 day. It could be 3 hours in a session, okay? It could be 3 pushes. So it's always going to be 3, but there's going to be a variation. There's going to be a trick in that 3. So that's why I said, to be consistent, to understand these things, go back and back test your charts, starting from 3 years back up to the current date. That will take you maybe 4 hours if you're still starting. With experience of back testing, it's going to take you less hours. But if you are starting to backtest, that will take you maybe 3 hours. It's okay. 4 hours, it's okay. The understanding you're gonna gain is gonna be remarkable, okay? Because this is gonna happen each and every day. You see now, let's bring in, you see, in terms of sessions, okay? We have 3 sessions, which this one is the 3rd. Now let's take out the session and bring in, and bring in the numbers. Okay, you know that when it comes to numbers, if we are talking about gold, I want you to see the settings, okay? We're just gonna add a 0, okay? We add a 0 here, we add a 0 here. The same applies to indices. Why? Because they are highly volatile. So you see, you can't analyze in terms of these lines. So we add a 0 and we add a 0 on the sweet spot. Now we're gonna get this, okay? Now let's look at our 3 pushes. They're gonna come in different variations, and I'm trying to use that right now. Say for instance, right now we will take from this line. This is let's see, 25 pips. Okay, this is 50 pips, this is 100 pips, and this is 150 pips. Already we know, because you're talking about this, we know that this session has gone up 140 pips, okay? So yes, I took from the line up to the line. So you have to know in which level is the market failing. It will show you where it's failing, okay? You must know at which level is it failing. You see, it went up, it never failed. Now you look at the behavior at the right time. We are looking at 3:30 USA time, okay? Remember, 3:30 USA time, okay? Now let's bring in this. We are gonna look at the time, okay? Okay, this candle happens at 3:15. You see it? I told you my broker is behind in 2 hours. So this right here, it's saying 13:15, okay, which is 3:15, okay, 3:15 if you're using South African time. Look at the following candle. The following candle is an engulf, which is happening at 3:30 exactly. 3:30 exactly, okay? Now it's preferable, once you see this at the right time, it's failing at a number, you can just switch down to a lower time frame, okay? Just switch down to a lower time frame. Now we're gonna look at our candle. Where is 3:30? Let me take this screen down up here. We are gonna, okay, where is the candle? Here is 3:30. 3:30. You see, it's a very big engulf after a pin, okay? It's an engulf after a pin. This clearly, if you look at the behavior right here, it shows you that there's a certain kind of behavior where they've been taking people up and they don't want them. Actually, you see this candle, it was a very big candle going up, and within seconds, you always say this, if you look at the candles every day, you'll notice that they have the behavior of going up and up and up, and they will hold the level up here, and within seconds, most people are entering thinking it's an engulf, it's a big candle going up, and within seconds they take it down like this. Okay, you find that this happened within the last 15 seconds. It just came down and ended as a pin. Now our candle is this one. This is our Brinks candle, okay? Now this is an engulf exactly at 3:30. Down here it's saying 13:30 because the broker time is behind in 2 hours. This is 3:30, okay? Now because this candle is big, you can just wait, see what happens. But this is the candle where you enter, and this is where you put your stops, okay? This is your entry candle. This is where you put your stops. In such instances, you don't have to wait for a break in structure because the timing is perfect. They've taken people up. Most people are up. And on 3:30, that's when the US session equity time opens. That's when the US session opens officially. Their opening hours. What do? They shift the zone. Okay? Immediately they shift the zone. Okay, yes, they do come back to scare those who are in a winning trade, okay? They do come back, but look at the behavior. Look at the behavior. What time is this candle? This candle closes at 13:40, okay? And if we go to 45. This is the candle that opened at 45. This candle closed at 45. Okay, it closed at 45 exactly. What did I say about the brings? What did I say about the brings? I told you it's a candle that opens at 3:30 and closes at 3:45. You're gonna see this frequently. You're gonna see this almost every day. Okay, because the market are designed to behave in a certain way. That's why you're gonna see this every day. And I repeat, 9:30 to 9:45. Okay, I don't want to rush this video because this is important. And now we have 3:30 to this is 3:30, 3:30 to 3:45, quarter to 4, every 45 actually. Let me bring in the rubber because I made a mistake, and let me bring back my pencil. This is 3:45. Okay, this is London session, this is US session. Okay, a candle that opens at this time and closes at this time, a candle that opens at this time and closes at this time. If it's a pin, if it's an engulf, okay, if it's a railway track, you can enter, but it must be at the high of the day or at the low of the day. There must be 3 pushes. Okay, in this case you don't have to wait for a break-in structure on the inside. Why? Because this is gonna happen every day. Okay, it's gonna happen every day. So if you were on a 5-minute time frame, then you could have entered after this pin, or you could have found an entry right when this candle was going down. Maybe on a 1-minute time frame, you could have found your entry here. And if your stop is here, yes, they did come down, but they didn't reach your stops. Okay, they didn't reach your stops. Just make sure your stops are 20 pips. If you are taken out, well, then it's only 1 trade per day. Okay, tomorrow you'll have another one. Your risk reward ratio will be huge overall. Okay, when we count, maybe in a month, maybe in a week. Okay, so you see, if I go back to 15-minute time frame, this candle was so big. That's why mostly it's advisable to go to a smaller time frame. If you understand a 1-minute time frame, then you could have had 2 entries. Okay, or you could have a place to add size, because when you enter, your entry must have a small size. You want it to be confirmed. And when they come back, okay, you can say maybe they broke structure here when they went down on a 1-minute time frame, and then they came back and failed. This is a triple top, guys. It can't be more perfect than this. On a 1 minute, it's gonna be, this candle will be composed of 15 candles. Okay, because it's a 15-minute candle. You could have entered here. You see, it's a pin engulf. You could have entered. Let's see the time. Okay, this was 29. Yes. You could have entered when this candle closed. Okay, maybe you enter right here, and you had your stops right above here. How many pips will this be? This will be 12 pip, guys. And then when the move goes and comes back, your initial position is low in terms of lot size. When they come back and confirm your thesis, then you enter again with a bigger position. Maybe if you want to open a lot size of 1, open 0.3, then now you can open maybe 3 positions, 0.3, 0.3 and 0.1. You can open 3 positions right here and put your stops maybe above this line. It's up to you where you put your stops. Okay, because the thesis is this trade should go right away, quick. Okay, you see, you put your stops here, you move your initial stop from here, you put them here, you add more position, more size in terms of more trades, and then you take profit. 1 trade could be 50 pips. Okay, maybe it's roughly 50 pips from here. Just imagine you got your 50 pips in 6 minutes. How crazy can that be? 6 minutes you got your 50 pips. Or else you could have some positions you could have set a take profit of here, because this is the low of the day, or the low of the day itself. This is the low of the previous day, or the low of the day itself. Okay, maybe one position took at 50, or two positions took at 50, and then you had maybe two other positions taking at the low of the day. Okay, that's a very big win. Okay, that's a big win. But importantly, brings trade is important, guys. Wait for the right session, wait for the right time, wait for the time, wait for the right time. 9:30 in most cases is when things will start happening. Oh, some of the time 9:30 or 3:30. I usually prefer US 3:30. Okay, so write it down. Brings trade. Okay, when sometimes you'll find that, okay, they've been going up and up and up, and then they just go down like this, and then 3:30 opens here, 3:30 opens here. However, they take the market up again, close everybody here, and then 3:45 closes somewhere here. Okay, maybe with an engulfer whatsoever, or maybe this is 5 o'clock. But just because you have noticed the behavior of 3:30, what did 3:30 do? 3:30 came and corrected. Okay, everybody who bought here has been knocked out, and this again looks like a pullback. Most people are buying again here. Okay, and as they buy here, what happens? The market is taken down at the right time. Just know the variations. There'll always be variations. Okay, because this is how they trick. Okay, this is how they trick. There'll always be variations. Okay, let's go to another currency and see what happened. You saw this one. This was perfect. The setup was amazing. Okay, oh no, sorry, no, this is why I don't want to delete. This is okay, I don't want to set a set stop or whatsoever. Okay, so if you look at this, I don't want to be in the market during this time. What time is it? It's 8 o'clock. The Asian session is opening. I don't care about it. Okay, I don't care about what it does. Okay, if I missed, I missed, but I don't want to be in it because I want to look for the US session. Okay, sorry, I had to respond to this person. It's quite important. Okay, you see, most of the time you want to be in a trade without even knowing what's happening. Wait for it to paint a picture. Wait for it to paint a picture. This is a picture. What are you doing? We are going up 1 level. We are going down 2 levels. And then 1 level, 2 level, 3 levels. We have gone down 3:30. Most people want to enter here. Most people want to get the entry here. Most people want to do all sort of crazy stuff. Yes, you could have entered here. But for me, there was just no entry. 8:45. There was no entry for me. Okay, yes, you could have taken a continuation, but it becomes easier when you have seen the entire picture that has been painted, because markets will always do this. They will paint a picture for you. Okay, yes, sometimes if you're waiting for the for 3:30, which which I personally think is the best time to trade, brings trade. Okay, sometimes it's gonna be the London session. Let's go and look at other trades. Let's look at USD JPY. What did it do? Okay, first of all, we want to know what happened. Okay, we want to know what happened. Let's bring in our session times first. Let's bring in our session plus numbers because we want to know what happened. Okay, we have a market that was pumped up. Oh, this is crazy. They pumped the market up. Okay, look at the first session. It didn't happen like what we were talking about on the previous session. Okay, it didn't happen that way. But what really happened? They took the market down and oops, it went up. Let's count how many pips. Okay, this is a pump. Okay, it went up 120 pips. Okay, let's bring in our box. Try to figure out, because we must know what's happening. Okay, we must try to figure out things. Okay, this is 1 because okay, 100 and something, then it's gonna be 50, 51, 2. Okay, let's try to take it to the third box. Okay, remember, it's not always gonna be perfect, but you see it failed in this box. Okay, here's the pin. It failed in this box. Now you can see the market has been pumped up almost 3 levels of 50. To me, it's 3 levels of 50. Once it's above 120, to me, it's 3 levels of 50. I take it as 150 pips because I know it's not gonna be as perfect as you want it to be. Okay, so they took it in 3 pushes. Let's count the pushes. I told you there's a variation of pushes. Okay, this is 3 pushes in terms of pips. Okay, let's discard that right now. Let's look. Okay, this is the first push. How do you see pushes? 1, it went up. Major pullback. That's why it makes a first push. 1 push. Okay, 2 pushes. Okay, there will be variations, guys. They're not gonna make it as perfect as you want it to be, but it's gonna be the same thing. Just know the variations. Just like a weekly template has variations. This week they'll start making the low, Monday, Tuesday make the low, and then they go up. Next week, Monday, Tuesday will make the high and the low. They'll consolidate in between. The next week, Monday, Tuesday will make the high. They'll break that high and then come back in 3 pushes. Okay, 3 days. It's always gonna be 3, but there's gonna be variations. You just have to practice and see those variations. Get used to them. Okay. So now the only difference is they didn't use 3 sessions in this case. They used 1, they used 2, and the third push, usually if you are in a trade and if you are following me, I will tell you that, you know that I'm going to tell you that it's best to exit on the third push, because third push, people are stubborn. Third push, people want to see something for 3 times before they believe it. Okay, if something happens 3 times, then they will believe it. Something happens in 3 times, they'll believe it. Something happens to one person, they'll say, maybe it's this. It happens to the second person, maybe it's this. And when it happens to the third person, then they will believe and start concluding. Okay, so 1 push, pull back. 2 push, pull back. Look at the pullbacks, guys. It can't just happen like this. It's not a coincidence. If you think it's a coincidence, well, believe me, it's the market behavior. They behave like this. They have been designed to behave like this, following human behavior. We are stubborn. We believe things on the third time. Okay, 1, 2, 3. You see, that's when, you know, I told you, that's when Asia starts consolidating. And then London, if you look at London, what did London do? London took the market down. Consolidation most of the time will be 50% of the move. 50%. It can go beyond that, but most of the time it will be 50%. So now we know that this market went down. Okay, on this day, we know we have a push that went up in 3 pushes. This is a pump. The pump went up in how many pushes? 3 pushes. Pump. Okay, this is a pump. They took the market up in 3 pushes. I'm sorry, this video is getting long, but I don't know. If it will help, then it will help, okay? Because some of the things are not as easy as drawing trend lines and explaining trend lines. Trend lines are very easy. This is not trend lines. There are variations here. And we are expecting a dump. 3 levels, it started failing, gave a fade breakout. You can see it failed here. And then now let's see. I'm not following the day count, okay? I'm trying to show you the number 3 and the brings trade, okay? Look, we have 1. I told you, you'll be seeing this every day. 2, okay? And this is the third push. When? US is the third push, okay? I told you to take a screenshot of this. You're gonna see it every time. And I told you in my previous video that if you really want to start understanding something, then you must make sure to use what we call screenshots. Paste them on your wall, okay? So that when you see this kind of things every day, they will sink in. This is not too hard. It's hard to understand on the first attempt, okay? Second attempt, do this 20 times. then you will understand everything quite clear. Everything will be quite clear. Do it 20 times, it will be quite clear. Okay, 1, 2, 3. We have 3 sessions that are going in one. It made a low, yes, and then it came back. Then it went three pushes down. Okay, 3 pushes down. Okay, let's bring in our box. If you think we should bring in our box, but just know the variations. These things are gonna happen in different variations. I always start at the line. 1 push, 2 push, 3 pushes. It fails just after the 3rd box. So right now we can say, okay, we can put 4 boxes right now, but let's look at the behavior. It fails right after the 3rd box. Okay, if you are in a trade and it goes 3 pushes, cut it. Okay, it's failing. Let's look at the time now. Okay, what time is this candle? Oh, it can't be perfect. It's another currency, guys. This candle came at this one. You see this candle? Let me blow this a bit. I'm on a 15-minute time frame. I'm blowing this so that you can see what I'm talking about. Look at this candle. Let's look at the times now. This candle, 3:15. Okay, the broker is behind in 2 hours. This is 3:15 South African time. And then look at the following candle. It's an engulf pin because it has engulfed this previous. Engulfs comes in very different variations. Remember, they are going to use variations against you. They're going to use different variations, okay? And that is important. They are going to use different variations, okay? Please pay. They are going to use variations. So look at this candle. This is an engulf, but in a different form. What time did this candle open? It opened at 3:30 and closed at 3:45. This candle opened at 3:45. So I told you, this candle brings trade. Once you see this, you can go to a smaller time frame to get a very nice entry. What did I do? Oh, sorry, I'm on the lines. Okay, how perfect could this be? It's failing at a line. Okay, say the time is perfect. Okay, and then you can take it. I told you, most of the time corrections will be 50%. Okay, so if I'm just telling you that if you are gonna try to hold for all the pips that you need 1,000 pips. Remember, it's not about the pips anyway, it's about the quality. If you get a quality trade, you can actually size in. Okay, 50 pips. This move has moved roughly okay, let's just say roughly, where did I take it from? Okay, let me just take it from here, from the line. It has moved roughly 89 pips. So you can take half of that. That's 45. Okay, you can take maybe 45, but in this case, if you took 50, then you are still good. Okay, because you took it at a line. More likely it's gonna go to the line, and it could close these ones out, or it could just scare them. Why do they scare these guys? Because they know that if there were people who actually bought here and their orders got fulfilled here, then those people, maybe they're not on their screens. They will come back and realize that, okay, or maybe some are at the screen and they get to break even. Then these guys will come and realize that, oh, okay, we are breaking even. They will close their trades. So sometimes they will break, sometimes they will just use spreads to go beyond. Okay, sometimes they will use spreads to go beyond. Okay, that's what they will always do. Okay, they will always do. They use spreads against people, and I'll show you in another video. Okay, so you have your 50 pips right at the Brinks trade. So perfect. 3:30, 3:30. You waited for them to paint a picture. You didn't try to catch all these things in between. So what I'm trying to show is wait for 3:30. I'm also doing that most of the time. I wait for 3:30. Depending on the pushes. How are the pushes? If 9:30 is at the high or the low of the day, I know the Brinks might happen at 9:30. It will happen at, the Brinks is 9:30. or 3:30 anyway. So I know the brings might happen if London is at the low of the day, but or the high of the day, and there are 3 pushes already. So you need 3 pushes. Okay, I know I said break of structure, but today we are talking about the brings. Okay, you don't need a break of structure on the inside. Break of structure where okay, if we go to smaller time frame, where is that date? Okay, if you go to a smaller time frame, no, it's not this, it's here. If you go to a smaller time frame, then it's gonna be about 3 candles. Okay, let's look at them carefully. This is 325. This is 330. It opens here, 1, it goes, brings people down, makes them believe they're still going down, and there's a 3rd candle that closes this. Okay, there's this candle which opens at 340 and closes at 345. Exactly the same thing we talked about. If we go to a 1 minute, then it's gonna be made up of 15 candles. Okay, sometimes there'll be variations. Okay, but this is gonna happen every day. Just rewatch this video, make sure you understand the bricks trade. Okay, I just hope and believe everything is clear to you. And to confirm your trade, most of the time the candle, if it's a brick trade, the one that comes back into the 30 EMA, that's when you can take your position with your trade without worrying. But if you go to a 1 minute time frame, that is where you will be able to actually size in. That's where you'll be able to size in. Okay, because most of the time, okay, even here it gave you this entry and it didn't really give you a good opportunity to size in up until here or here. Okay, but it's all about that. Let's look at 330. This is what, 26. You see, on 1 minute 330 was inside, and then you just waited because you know, okay, right now they're gonna show something. And on a 1 minute time frame, what they do is they go up, they pull back, go up, they pull back. That's why the 1 minute gives you an opportunity to open multiple trades. But look at how perfect this is. Look at this bring trades. You can just bring your stop loss to the low. Okay, if you get kicked out, you got kicked out. That's your only trade you took on the day. This is 11 pips. Okay, so guys, I believe you do understand this. Okay, I believe you do understand this. Okay, some of you will say, okay, I'm showing this because it has already happened. Guys, remember one thing you have, because people are going to say it's hindsight and whatsoever. It's fine, but remember, you have these things. You know the times, you know the pushes, you have them. Okay, I'm showing trades that I took. You have the pushes. Okay, you know the pushes, you know the time of the brings. You wait for them to go, they come back, they engulf. You see, a candle that a candle that opens and closes at 3:45. Even if it was the second candle or the third candle, already you know what has already happened. Okay, sometimes yes, they will do this and you find that 3:30 is inside and they still want to make another push and another push so that they can actually give the trade on the last hour of the session. The last hour of the session, again, it's 3 hours. The session opens at 2 o'clock, 3 o'clock, 4 o'clock. Maybe you get the trade at 4 o'clock. That's 3 hours. Okay, or you get it at 5. I mean, at 5 it opened at 2. That means 5 it's gonna be at 3 o'clock. You get it at 4:34 something, 4:45. That's still part of the session. But look starting from 3:30 and pay attention to the brinks. This is highly important. I'm not gonna show other currencies because the video is already almost 1 hour. So I'm gonna end it here. But look at the brinks trade. If I was to repeat, I will show you again and again and again and again. There will be variations that we know, but look for, if it's 9:30, this is for London session. London. I don't look at Asia most of the time, okay, because the market must paint a picture for you, unless if maybe the previous day they gave the pushes and stuff. But most of the time Asia is going to be a consolidation, so you don't have to bother yourself. Yes, sometimes you wake up and see that, oh, they've gone. It's fine. If they've gone, they've gone. Remember, you don't miss anything on the markets, because the moves are going to happen every day, every day, every day. Just like if you think, oh, this was a good one, it went 100 pips and I missed it. No, you didn't miss it, okay? Because that will establish a certain mindset where it seems like that is the only one. No, tomorrow there are going to be other ones. Tomorrow there are going to be other ones. Every day there are going to be good ones, okay? And then we go to USA session. This is actually, what am I doing here? Where's my pencil? Okay, this is 3:30 South African time. Look at this time. The candle will close at 3:45. This is a Brinks trade, okay? Brinks trade, okay? It's a Brinks trade. And this one, the candle will close at 9:45. Normally it's 15 minutes. We always look at 15 minutes. If you need an entry, 5 minutes or 1 minute, okay? That's when you get an entry. For one to size in, 1 minute. It's good for sizing in. Remember, your initial position, don't put all your size on the initial entry, okay? Don't do that. Wait for it. If you, okay, if say maybe it gave you a pin and then engulf, then it will go. However, market behavior, they're designed that way. They will come back, okay, and then try to scare everyone. Remember, the objective of the market is to take capital from many and give it to few. They want to give all the capital to as few as possible. Therefore, they will come and scare you out of this trade. Then they will fall. When they come and scare you, don't panic. You have a very small stop. If they close you out, fine, okay? If they come and then maybe they give you another pin, because they will try to send people up, and then they will give a pin and an engulf. They want to shift the zones immediately. Then this is your another entry, okay? Now you can put position here. You can put size here, okay? You can enter. I told you, if you want to open a position of one standard lot size, you can use 0.3, 0.3, 0.3, and finally 0.1. Okay, that when you add that, it's gonna be one lot size, and then maybe 3 of your positions or 2 of your positions will take at 50 pips, and then you do a range expansion. Some will take at the low of the day, or on a 3 on an expansion. It's up to you. You want to take on 2 or 3. Usually for me, if the consolidation is small, I use 3. If I see that the consolidation is big, I want to use 2 on a Fibonacci. That's my personal preference, okay? So these are the most important things to look at, okay? And yeah, thank you. Kindly like, share, and subscribe for the algorithm, so that this kind of things can reach many, okay? So remember, market behavior, they are designed to shake everybody away who is on the winning position. They are designed that way. That's why if you are using a smaller time frame, after analyze on a 15-minute time frame, okay? And when everything is met, go to 5 minutes or 1 minute. But for size, I prefer 1 minute, because the stops will be small, and then you can add position and trail your initial position, okay? Some people believe in trailing stops. It's up to you. If maybe the market, okay, goes up, down, and comes back, scares people out, goes and comes back again. This is when after this move, you can, if your initial stop, say maybe the first position was entered here and your stop was here, and then after adding position, you brought your stops here, okay? Now don't trail these stops up until maybe the second pullback, okay? Because on a 1 minute, they're gonna have many. They're gonna go like this and this and this, okay? They're not gonna go like on a 15 minutes where they can just go a little bit violently. They can go and give 3 pushes like this, On a 1 minute, there are going to be many pullbacks, minor pullbacks, minor pullbacks. This is a major pullback. There are going to be many minus. Okay, there are going to be many minus that make up the major. So if you're using a 1 minute, only trail once they've came and failed, show that they are going, then you can trail. Because if you try to trail here, you'll find that okay, this trade had the potential of going 150 pips, but when you try to trail, you took maybe 30, and when you trail, they just came back for you. This is market behavior. They're going that way. Okay, they came back for you and you were kicked out with 30, whereas you had an opportunity of going 150. If this happens, then you might just regret, but don't regret. Okay, it's about locking in and yeah, having a profit every day. So I'm not gonna try to over explain everything. I'm saying go and wait for 3:30. Look at the candle that opens at 3:30 and closes at 3:45. Okay, just be patient, man. Let the charts play out. Let them show you 3 pushes. What are you entering for if you don't have 3 pushes, unless if it's a continuation? Huh? What are you jumping for? What are you in a rush for? The markets are not in a rush. The only quick moves you will see is when they give you a railroad track like this. They go up, boom. They go down, boom. Let me try to show you a railroad track quite quick, okay? Because I think I can show you a railroad track quite quick. Let's go to gold, and let's come to this, and let's go to a 1 hour time frame. Let's see. Did they give us a railway track? They went up, they came down. Nah, this is not a perfect definition of a railroad track. No, it's not. Okay, I'll show you a railroad track when it happens. A railroad track is something like this, but this is not a railroad track. A railroad track is where they go up fast, they come back immediately. They take you up quick, they come back immediately. They are shifting zones immediately. You see what happened on this 1 hour time frame? This shows that they wanted to shift zones immediately. After an hour, you're in a big loss. You're not going to close at a loss. You're going to wait for, oh Jesus, let them come back. And they're never going to come back anyway, okay? So, guys, thank you.